Welcome back, everyone. Really glad you're here. Bitcoin is sitting around 71K as I'm recording this. The fear and greed index just hit 11. And for context, it goes from 0 to 100. We're at 11. That's extreme fear, pretty much. And I get it. The Middle East is escalating. Oil is spiking. ETF outflows just ended a 7-day inflow streak. Ancient wallets that haven't moved in a decade are sending coins to exchanges. On the surface, this looks bad. But by the end of this video, you're going to understand what the chart is actually saying and why the positioning data is actually doing. So you can make a calm, informed decision about where you stand right now. The one number I want you to hold on to, 68,000 USD. That's the 200-week moving average, the most important floor in Bitcoin's entire history. Everything today comes back to that level. And when I show you the on-chain picture in a few minutes, it's doing something I genuinely didn't expect to see at these levels. So let's start with a chart, clean and simple. Right now, Bitcoin is sitting between two major moving averages. The 200-day EMA up at 87K, that's been acting as the ceiling since we came off the heights, and the 200-week EMA at $68,000. Bitcoin's long-term backbone, the floor that has held through every major crash in its history. We're in the middle of that range right now. The weekly RSI is pushing toward oversold, which just means selling momentum is getting stretched. Not at the historic floor yet, but trending that way. Here's what makes this setup so specific. I've seen it 3 times before. March 2020, COVID hits. Bitcoin crashes to $3,800. Fear and greed hits 8. Everyone says the bull market is over. Bitcoin goes from $3,800 to nearly $69,000 within 18 months. Now, November 2022, FTX collapses. Extreme fear for weeks. Bitcoin bottoms at $15,500. From there, it grinds back to $73,000 by early 2024. August 2024, the Yang carry trade unwinds. Bitcoin drops from 68K to under 50K in days. Whales move coins to exchanges. Extreme fear. Bitcoin is back at all-time highs within weeks. Every single one of those moments had 3 things in common. Number 1, fear and greed in extreme fear, just like today at 11. Number 2, a real macro story giving people a legitimate reason to panic. Number 3, long-term holders showing stress signals, coins moving to exchanges. Now, here's the part nobody's really talking about, and it's on the chain data. And I will get there in a second. But if you're looking at positioning around levels like this, Bitunix is what I personally use. Clean platform, simple execution. Link is in the description. Fear and greed at 11. The history of this index, readings this low have almost always landed within a few weeks of a local bottom. Not every time, but as a contrarian signal, an 11 is rare. Funding rates are flat to slightly negative right now. That means more traders are actively betting Bitcoin falls than rises. When short positionings gets this crowded, the market has a habit of moving to the other direction. Not magic, just mechanics. Those short positions have to be covered eventually. Now on chain, here's what I teased earlier, MVRV. This compares what Bitcoin is worth today versus what the average holder actually paid. Think of it as an overheated or undervalued reading. Right now it's sitting in neutral territory. Holders aren't in the danger zone of extreme overvaluation. There's no mass underwater stress. The realized price, the average cost basis across all Bitcoin, is sitting somewhere around 42,000 to 44,000. At 71K, the average holder is still meaningfully in profit. We are nowhere near the kind of widespread realized losses that create genuine extended bottoms. Now, Cointelegraph reported today that ancient wallets, coins untouched for over a decade, started moving to exchanges. One wallet sent 1,000 Bitcoin worth around 71 million to Binance. Another early holder moved 650 Bitcoin to Kraken, his first large sale in 5 months. Here's how I read this. Long-term holders reducing exposure during a genuine geopolitical shock, that's rational profit taking. What would actually worry me is short-term holders selling at a loss. That's real capitulation. That's when bottoms get messy and extended. We're not seeing that at a scale right now. On ETF flows, Wednesday saw $163.5 million in outflows, snapping a 7-day inflow streak that brought in over $1 billion. One bad day doesn't erase over $1 billion, but I'm watching next week closely. Before I get into what I'm personally doing, there's one thing that could break this whole setup, and I want to be honest about it. The big macro story right now is energy. Strikes on Middle East infrastructure sent Brent crude briefly above $119 a barrel before settling around $114. WTI touched 100. High oil keeps inflation elevated, which keeps the Fed from cutting, and it pushes institutions into a risk-off mode where they reduce everything volatile, including Bitcoin. But here's something telling. Gold fell 4.2% in the same window Bitcoin fell. When gold and Bitcoin sell off together, together, that's not a Bitcoin story, that's investors raising cash across the board. The Bitcoin's fundamentals aren't broken, the macro is just messy right now. The Fed held rates at 3.5 to 3.75%, and traders are quietly starting to price in that if the oil spike is geopolitical and temporary, inflation cools with it and rate cuts come back on the table. That shift in expectation, if it pays out, is a quiet tailwind building in the background. The DXY at 99.3 is elevated but off its recent peak. A softening dollar is usually a tailwind for Bitcoin worth watching. And this is where the chart, the on-chain, and the macro all start pointing in the same direction. Let me show what I'm doing with it. When I'm placing trades around key levels like 70 to 71k, I use BitUnix. Simple interface does what I need it to do. Link is below, by the way. Now, let me just be straight with you. This is a hard market to be in. The headlines are genuinely scary. I won't pretend otherwise. But here's what I keep coming back to. The 200-week EMA is at 68k. In Bitcoin's entire history, that line has only broken on a weekly close once, and it recovered almost immediately. That's not a small detail, that's the whole thesis. I've been adding stage small positions in the 70 to 71k range, not all in, keeping meaningful cash on the side in case we see the highs of 60s. If 68k breaks on a weekly close, I reassess. Simple as that. Having a plan means I don't panic sell at 67k and panic buy back at 78k. That's the game most people lose. And it's easy to forget when the price is down, but there are only 21 million Bitcoin that will ever exist. About 4 million are estimated lost forever, and roughly 70% of the supply hasn't moved in over a year. The whales selling 71 million this week are noise. The scarcity hasn't changed. So the full picture: base case 68k holds, the oil shock proves temporary, ETF flow stabilize, DXY softens, Bitcoin grinds back toward the 87k 200-day EMA. Risk case: the conflict escalates further, oil stays elevated, inflation stays hot, 70k gives way, and the 60 to 65k range becomes the next conversation. I have dry powder ready for exactly that. The level to watch: 68k. Weekly close below it, everything changes. It holds. This is a stress test, not a breakdown. Now you've got both pictures. The chart is telling you there's a historically significant floor directly below price. The positioning data is telling you sentiment is at extremes. The macro story is macro, not Bitcoin specific, and long-term holders are reducing, not capitulating. That's your full picture. We'll keep watching this week by week. Let me know what you're seeing in the comments, and I will talk to you guys in the next video.